All right, good morning. Today's Friday, May 17th, and what you're looking at right now is the E-Mini S&P 500 chart. It's a 3-minute chart, and I thought I would point something out that I think all of you can use in your trading, not only if you're a day trader of the E-Minis, but if you trade any market or any time frame. This is a great trade setup. So take a pen, get some paper, maybe even download this video to your computer because I think you could use it. It's a great trade setup that I look at, and these are just, it's like taking candy from a baby. And these trade setups, okay, the rules wrapped behind it is very objective. There's no ambiguity. The risk to reward on these type of trades are really slanted in your favor, okay? So let me this is yesterday's trading, okay? Market opened up, rallied up, came down, bounced beautifully off the 200 exponential moving average. Now, this is what I want to show you. This was the high of the day, all right, made in the first 27 minutes of trading. This lower white horizontal line really just represents this high, taking it across from left to right. So the market came up, it retested this original high, okay? It took it out by only 75 cents. Now, you got to keep in mind on something like this, the market is testing not only the daily's high, but look at the high right over here I'm going to circle. This is the all-time E-Mini S&P 500 high, right? It's 1659 3/4. So essentially, when the market made this high of 1658, the market came up to retest that level. Now, when the market is testing not only the day's high, but a significant, really critical high, like the all-time high here, okay? So what I'm looking at, I'm looking for a certain price pattern. Really two price patterns I'm looking for the market to, form, okay? When you get a test of a significant high, right? The high of the day and or, in this case, right? The all-time high at 1659 3/4, and the day's high up until that point of 1658. Market came up, took it out by only 75 cents, then came down off the high, and then came up one more time and tested this high. It's at this point I'm looking for either a bearish outside vertical bar, right, where the high takes out the prior bar's high and the low takes out the prior bar's low. It's got to close in the bottom quarter. Or, of course, the pattern that I'm always talking about, which is the opposite of an outside bar. It's the inside pattern, right? Lower high, right, than the prior bar, and a low that is higher. So let me get rid of all of this now and show you what happened. We got a bearish outside vertical bar on the high of the day. So again, we tested the high of the day that was put in place at 9:57 yesterday, right? Came all the way down, bounced up. When the market came up to test that 1658 level, being aware that the market was within 1 point of the all-time high of 1659 3/4, I was certainly looking for that bearish pattern to occur, and that was, look at this, the bearish outside vertical bar, the bearish engulfing pattern right there. Took out the prior bar's high, and that high was actually testing the high of the day. Took out the prior bar's low, right here, and closed on the low of that bar, right, 1657 1/4. The low, it closed at 1657 1/4. That was a beautiful textbook shorting opportunity. You want to get short this market. So I don't care if this is the E-Mini S&P 500, wheat, corn, a stock, ETF, a Forex currency pair. When I see a pattern like this, testing the absolute high of the day in conjunction with an all-time high or even a more significant high from a ways back, like we did right here, this is like taking candy from a baby. Now look at, you go short here on the close of that bar or the open of the prior bar, you stick your stop above the high, and you let the market run, okay? And as you can see here, the market dropped nicely to this level here, rallied up to pretty much where you got in, and then really dropped off. So depending on how you worked this trade, you could have milked this trade for a lot of points here to the downside. Now, of course, I always trade with logical profit objectives, okay? But I trade multiples, obviously, so I'm going to take some off. I'm going to move my stop and work the trade accordingly. So again, this trade setup is a great trade setup. When the market is testing either the high of the day or the low of the day in conjunction with another significant high, combined with the price pattern that I showed you that happened yesterday, the bearish engulfing pattern, that is a phenomenal trade setup, okay? Now what I want to do is I want to flip it to a daily E-Mini chart because there is a potential trade setting up right now, okay? Now I've told you for weeks and weeks on end how strong this market is. Obviously anyone can see it. Obviously the market is a little overextended, but I've seen the market move a lot further. I don't care how overextended the market is, okay? So what I look at in a situation like this is, potential short-term counter trend moves, which is against the trend. The trend is up, so we're looking for a potential move to the downside. So look at yesterday. Yesterday was an inside pattern. Yesterday's high was 1658 3/4. The prior day's high was 1659 3/4. So what we have here is we have a lower high than on Wednesday. Yesterday's low is 1646. The prior day's low is 1644.25. We've got an inside bar, okay? An inside bar right now. So even though this trend is up, what I'm willing to do is if the market is able to take out today or yesterday's low, then I would be looking to go short this market. So you can either short the E-Mini S&Ps, or what you could do is you could buy the SDS, which is the inverse fund of the S&Ps, right? So when the S&Ps move lower, the SDS goes up in price. So if you're trading an IRA account, you can do that. Or you can just outright short the SSO, okay? So that's what I'm looking at here. So again, if the market is able to take out 1646 to the downside, I would go short with my stop actually above 1659 3/4. I'd go to 1660 1/4 above that round number, okay? That's what I would do, and I would look for the market to move down. Now, I'm not really necessarily saying on the day. I mean, if it happens today, I don't necessarily expect the market to move down to a 38.2% retracement of this up move. See, look at this is what I'm measuring here. I want to measure from the low of the gap here to this high. The 38.2% retracement is down at 1638.86. The 50% of that up move is 1632.5 and the 60. I'd be looking for the market to move down into these zones, right? These retracement levels. So that's what I'm looking at. The market has opened up higher today. Let's see here. All right, the market has opened up higher. Okay, so we got quite a gap up actually. Market closed at 1648.5 and opened up all the way up to 1654 3/4. As you can see, look at this. Again, another reason why you want to take a look at a 200 exponential moving average and a 50 exponential moving average. Okay, the market gapped through the 200 up above the 200 and the 50, right? Put in this high here, came down. Look at where the market came down to. This is a great trade setup as well, but I don't want to get off track here. Okay, so again, open up higher, put in a high, came down. Look at the 200 and the 50-day. They're converging. They're coming together. A great buying area in here, and as you can see, the market's rallied quite a bit. Look at this. We've actually tested yesterday's high here. Look at this. We've taken it out marginally. Okay? So look at today's high so far. 1659. 1659. We've taken out yesterday's high by one tick only, and we're within 75 cents of the all-time high. So if I were to get a bearish outside vertical bar or an inside vertical bar, I would be looking to do the exact same thing that I did yesterday, right? The bearish outside vertical bar, I was short because it closed in the lower quarter, and it was an engulfing pattern. This is not an engulfing pattern because we matched the prior bar's low. But this bar right here that we're currently working on could be an inside pattern. Okay? So look at this. So far, the low is higher than the prior bar's low, and the high is lower than the prior bar's high. So this could, in fact, be an inside pattern. We don't know because the bar hasn't closed yet. We'll go back to that in a sec. Let's flip it to a, I want to show you the, let's see, the Australian US dollar. Now, the last couple of days I've been saying that there's a potential trade to the long side if we got a trade set up based off the weekly chart, not the daily chart, but the weekly chart. Let's go to the weekly chart real quick. Now, when I was talking about this, we were at the 200 exponential moving average, but we have since really taken that out to the downside, okay? Okay, we have actually penetrated the 200 on a weekly, and on a daily, there was no price pattern. So this is null and void. There are no trade setups. There were no price patterns on a daily chart to potentially go long based on a weekly. So I wanted to flip back to this chart just to tell you that the Australian US dollar is no longer on the table. I'm taking that off my watch list. Actually, if anything, I'm looking to go short this market on a pullback, and I'll let you know. Between the mid to the upper band, let's draw. This is going to be a long video, and I apologize, but hopefully you're getting something out of it. Let's measure from the high down to this low. I would love to see a nice snapback, a nice bounce in which I'd be looking to go short this market. Let's flip back to the E-Minis again. This bar has not closed yet, but I am looking to see if it's an inside vertical bar. I'd be looking to go short this market if the market's able to take out the low of that inside vertical bar. So let's just pretend this is an inside pattern, which it is right now, but it's not closed yet. So technically it's not an inside because it hasn't closed. Once it closes, then it sets up for a potential trade. And the potential trade would be when the market penetrates down through the low of that inside pattern. That's my short entry with a stop above the 60 1/4 is how I would play that. So I'm going to pause the video and I'm going to wait to see if this all right, now this is closed. This is a 3-minute bar. We closed. It's an inside bar, right? The high is lower than the prior bar's high. You see that? And the low is higher than the prior bar's low, right? And so the trade setup, here, let's go back here a little bit. Again, look at the trade setup, based very similar to yesterday's trade, but it's an inside pattern. It's the reverse pattern. We're testing, we tested yesterday's high. We actually took it out by 1 tick only. Okay. And this is a pattern that you've seen me trade over and over and over and over again. So if the market's able to penetrate down through 1657 1/4 to the downside, I'd be a short. I'd be a seller at that. All right, I am back and had to grab the phone. I apologize. That was actually Doc Severson calling me up. So look at the market has taken out the low, that inside vertical bar. Remember, when it penetrated down through 1657, so far we've gone to 1656 1/4. So we've moved about a point to the downside, and that's to be expected immediately. The market's moved 1 full point so far. So this video is very long, so I'm going to cut it short. So if you want to watch to see what happens with this, that's great. So we've picked up about 75 cents so far to the downside. I would expect for the market to move down a little bit more. But what I'm seeing here is obviously anyone can see this. It doesn't take a rocket scientist to see it. But this was a pretty big move, right, between the 50 and the 200 up to this high. So we had some momentum behind it. The market, as you can see, the market has gone down to between the 38 and the 50% retracement of that morning's up move, right? So whether or not we're going to continue up and try to retest the all-time high of 59 3/4, nobody knows, right? It's speculation. All you can do is you can manage the trade accordingly. And that's what I'm doing right now. So right now, okay, I've taken a little bit off this trade, not much, just to lock in something, right? 50 cents, that's actually nothing. But my stop is above the 58 1/4 to 58 1/2, 58 3/4 rather, above this inside vertical bar high. If we come back up and take out the high of that inside bar, I don't want it anymore, so I lose a little bit. And I'm still looking for this market to drop down a little bit. Again, but we're at a support level. You know, we're also at a support level. This market could rally and try to retest those highs again. So, again, an awfully long video, but hopefully you got something out of it. Let's see what this market does here. I will revisit this on Monday. Have a profitable day and a great weekend. Bye for now.